taking an unconventional look at stocks, property, bonds, economics, and more. This is the Total Money Management Podcast with Steve Moriarty, Tom Hill, and Jacob Senior.
Welcome to the week that was. I'm back, just the two of us again. Steve, how you going, mate?
Still Tommy. Still no Tommy.
Tom's, I think he's lost in Cairns. Drowning his sorrows.
Up there in the sunshine.
In the humidity.
Righto.
All right, this week we're covering July 22 to 26. And we're going to cover things like the Biden and Trump change of hands and handover between Kamala. Is it Kamala?
Kamala Harris.
Kamala, yeah. Which have been interesting next few months.
Absolutely.
Dual economy, signs of trouble. We're going to talk a bit about mean reversion and differences between bubbles and recessions. And then we might finish on a bit of valuation as well. So, mate, tell us about the change of government.
Well, yeah. Will it happen? Well, in terms of July 22, 26, everybody knows that Joe got the bullet, so to speak, not Donald. So it was just suicide in Joe's case. Yeah. But more seriously, yeah, I think the issue is now whether Kamala Harris can rein in Trump. And it looks, now this is tentative, but it looks like she is. But there's a bit of a honeymoon period. Mm-hmm. So the Republicans will ramp up against Harris. They'll find some weak spots, what's going on. I think the real issue is, personally, I think the issue is we don't want Donald Trump, and if you put up someone who's at least half decent, we'll vote for them. Yeah. And I think that's what will happen. It's,
for me, they haven't, the government haven't given much time for people to get used to Harris.
No, but that can be a good thing because you can you can win off on the honeymoon.
Yeah, yeah.
And so rather than, and this is often what happens, you vote a government out, right? So, for example, you say, oh, Donald Trump's an idiot. We're not voting for Donald Trump. Kamala Harris gets in because you voted for her. And then a year's down the track, you go, oh, my God, she's a nightmare. But you voted her in because you hadn't had a long enough time to look at her and go, actually, hang on, and that's what happened with John Hewson versus Paul Keating. People hated Paul Keating because he talked about the recession we had to have when interest rates were 18%, right, and killing people. Yeah. They couldn't wait to get rid of Paul Keating. John Hewson came in and wanted to bring in the GST. Mm-hmm. Right, and people just went, oh my God, this is a nightmare. And even though they hated Keating, they voted for him because they were frightened of John Hewson.
Yeah, okay.
Right, and then the next time when John Howard came up against Keating, Howard was an older, smarter politician who said, I'm just going to run a dead bat because I know people hate Paul Keating. And that's what happened, right? They belted Paul Keating. The first opportunity they got where it was safe to go to the alternative. And I think that's what's maybe happening with Trump.
Yeah, okay.
Right.
And it's similar to what happened in the UK with Rishi and Starmer, where the public have gone, we hate Rishi.
Yes, now. Yeah. Well, we hate the Tories.
Yeah.
Right,
they've been in power for so long.
They didn't want to do it in 19 with Jeremy Corbyn?
Yeah.
They didn't want to do...
I wouldn't have either.
But there you go, see what I mean? The people went, Corbyn is even worse than Boris Johnson, right?
Yeah,
somehow, which is saying something. But my point being, that's what people do, right?
Yeah.
Who's the least worst, even if I don't even like the one I'm voting for? Yeah. And it's not uncommon in politics, not uncommon at all. And that's why I think if Harris just runs a half-decent campaign, she'll be the next president.
Yeah, well, we'll stay somewhat close to it over the next few months for investing reasons, but also because I like the drama.
Yeah, but it is true because you see, and Paul Keating said, change the Prime Minister and you change the country. And we're at that time which we were talking about last week, which is politics is trumping economics, and so who's in charge in politics now is really super important
to how you invest. Yeah.
Well, to how you invest and how the country operates.
Yeah,
you imagine if Kamala Harris got in and said, listen, we want to be friends again with China. We want free trade, blah, blah, blah. The world would absolutely have to pivot, right? Because she's the American president. And this is what Donald Trump did. Everything was rolling fine until Trump in 2016 said, listen, we've had enough of this bullshit where we're looking after everybody. And he's quite right.
Yeah.
Right? He's quite right. And that's when a lot of Americans said, hey, I really like that idea. Right? And Biden was harder on the Chinese than Trump was. You see, that's why I say when you get that pivot, no politician's going to come out now and argue that free trade's the way we're going to go. Right? They're all talking about tariffs, protectionism, and so you've shifted the whole narrative to away from, oh, we should just import everything for cheap from anywhere, who cares? It's completely changed, and that's because Donald Trump changed it.
Yeah. And how does that impact emerging markets then? Because as we know, emerging markets are relatively cheap.
Yes.
Very cheap, and we're expecting them to have a decent decade.
Yes.
How does that impact emerging?
The emerging markets have got to decide who they're going to support. So, for example, you hear, and I think we talked about this a couple of weeks ago, about, people who are anti-American are very fond of saying, oh, China's going to take over the world and the Americans are hopeless and blah, blah, blah. Look, that's garbage. The fact is that Brazil is part of the BRICS, right? Brazil, Russia, India, China and South Africa. Yep. Well, Brazil has put tariffs on Chinese steel. Indonesia is now booting China out of its nickel projects, right? So what I'm saying is, don't think that the whole world, the emerging markets are all going to be friendly towards China, because every country is saying, we've seen what you did to America by hollowing out the industries. We're not letting you do that to us, right? And so it's a matter of convenience in saying, look, we'll take this part of your economy, but we're not allowing this part. Now, if you don't like it, fair enough, but that's what we're doing. Right? And so at the moment, you've got a big race now between China and America about how do we get certain countries on side. So the Chinese have just given $10 million, I think, maybe 100, to the Solomon Islands to double the police force.
Right. Okay.
Right? Well, why would China do that to a tin pot island all that way away? Because they have a vote. Right, in the World Trade things. Yeah. And they have a vote in the United Nations. This is what Japan did with whaling, right? Japan wanted to still do whaling, so it went and gave all these little countries with, half a dozen islands and 4 blokes, gave more money, right? And they said, okay, well, we'll vote for you in the United Nations to continue whaling. So places like the Solomons and PNG and, all these little countries are suddenly fated for their vote. And what the big countries do, China and the US, is say, okay, how can we help you? Right? We did it recently with, it may have been the Solomons, where the Morrison government ignored them, and then Albo came in, and one of the first things was Penny Wong was off over there going, hey, here I am with a bucket full of money. How can we help? Yeah, right? Because countries now say, well, if you don't want to help us, we'll go to the Chinese. Yeah. Right, and they go, no, don't do that. We'll help you, right? Right. Yeah. China wants to build a port, right? It wants to build a military base. This is all America did, right? After the war, the Americans got bases in Japan. They've got them all throughout Europe. That's the way you operate to keep the opposition out. And so China is trying to get a foothold in Asia by going to countries and saying, we'll do this for you,
but we want this in return.
Yeah. Right? That's all America did. Yeah. America said to the world, if we'll run the sea lanes, we'll make sure you can make money by selling stuff all over the world. Yeah. But it's time you've got to support us.
America did it last in the 1800s, 1900s. The UK did it from the 1300s or 1400s until the 1800s. It's whoever's in power at the time. Roman Empire did it for thousands
absolutely.
of years.
It's just, and that's why we're now seeing a change, because the Chinese are now threatening America's hegemony over the globe.
Yeah.
And now we've got a contest, right? For the last 40 years, it's been America or suck it up, nobody, right? And the Americans have had their way. Well, that's not the way it works anymore.
Yeah. All right, so let's bring it back onshore, and we spoke about this last week and actually for the last few weeks, but spending and spending the tax back, really. Spending the money, we're seeing it go towards debt, and in a nutshell, and it's not going to cause economic growth. So we've got to find another way, really.
Yes.
If we want to not head into a recession.
Well, I think it's not going to come from private consumption.
No.
So if Albo and Chalmers continue to go, aren't we good, we've got a surplus, that's all well and good for the economists.
Yeah.
But at some point the government says, tell the economists to shut up, we've got to spend some money to keep unemployment low so we don't get voted out.
Well, unemployment, I think we had 50,000 jobs over the last couple of months back in the Australian economy, but the unemployment rate has gone up.
Yes.
How do you work that out?
We have more people, for a start, coming in, and it's just the way that the economy operates. And again, this is why I spoke a few weeks ago about saying don't pay attention to the unemployment rate.
It doesn't make sense at the minute because everyone's driving an Uber and it's not real. It's not real.
That's what I mean. It's one thing to say we could have everybody employed if they were earning $10 a week.
Yeah.
So should we then say, oh well, things are really good? Well, clearly not. And that's why I'm saying...
What's the quality of living? That should be a measure.
How much are you paying people? If you give poor people money, they will spend it. But you see, the ideology for the last 40 years has been what they call trickle down. No, don't give it to poor people, give it to rich people because they'll invest it and that'll give poor people jobs.
Yeah, they will create businesses.
That's exactly right. But what we've got at the moment and what we've had for the last 20 years is businesses flush with cash because they're saying, well, nobody's buying our products. There's no growth. Why would I build a new factory?
Yeah.
Right? And this is what I'm saying. What COVID did was COVID broke that mentality because when we gave lots of money to the poor people, they went out and spent it and thought it was great. What did we get? We got inflation and economic growth, right? That's the way you do it. You give people money, they will spend it.
Yeah.
That hasn't been the ideology for the last 30 or 40 years. For the last 30 or 40 years, as I said, it's been, no, give it to the wealthy end and it will trickle down. Well, it doesn't. That's not the way it works.
The wealthy end invest more to make themselves richer.
Exactly. See, they're surplus, right? And what I mean by that is, as I explained last week, if you have $1 million and you end up at the end of the year with 1.2, you have made $200,000. Well, that had to come from somewhere else, right? Someone else went down 200,000. That's what they call as an accounting identity. It's not Steve or Jacob making it up. It's the way it works in accounting.
It's not fresh, new money just for you.
No. Right? That's why government is really important in terms of spending, right? And that's why I'm saying if Albo and Chalmers are not spending any money and indeed they're having a government surplus, then that means that they're taking in more than they're giving out. Now, if that's happening, it can happen from exports, which is part of it. But the reality is if it's just you and I and you make more money, well, I've got to have made less money.
Yeah.
Right? Or I've got to have borrowed and speculated, right? Which is only, again, a temporary thing.
Yeah, because you can't replicate, or it's very difficult to replicate that over the long term.
Well, yeah, because if I've got $500 a week spare and I buy an investment property which cost me $200 and then I come back and go, I'm going to buy another one, I'm going to spend another $200. Now I haven't got $500 left, I've got $100.
Yeah.
And that's why I keep saying at some point I go, Jacob, I can't borrow anymore. Well, when there's no one left to borrow, the economy starts to sink, right? And this is why heavy debt burdens are a problem because you've got to pay it back.
Well, the easy answer to that is more immigrants, right?
Well,
more overseas cash.
Yes, generally.
But that's got to stop too.
Generally. But that's right? Because now we've got a supply-demand issue, but it's tied up with things like Airbnb.
Yeah.
Right? I live in an apartment block. The fellow in an apartment block has got a 3-bedroom unit like me.
Yeah.
Right? Now, about 6 weeks ago, he moved out and moved in with his new partner and they bought a property somewhere else, right? His apartment's been sitting there for 6 weeks. And I said to him, what are you going to do with it? You're going to sell it or rent it? He said, I'm not sure. I'll think about it.
Just hang on for a bit.
There you go. There's 3-bedroom apartment just sitting there, not housing anybody.
Yeah.
Right? I've got a friend who's got units down the Gold Coast, right? And he uses one as a weekender.
Yep.
Monday to Friday, there's nobody in it.
Empty. Yeah.
Right? And now replicate that by maybe 100 or 200,000 wealthy people who have got a holiday home, right? That's why we got problems with supply and demand, right?
Yeah. And there's a lot of views around, isn't there? with a few properties.
Well, if the
oldies.
Well, yeah. If you look at, and again, we talked about this last week about distributions. My hunch is, and I haven't got any figures for it, but generally what you're seeing is the wealthy people are able to buy property. Now, they buy it for themselves as an investment, or what we're seeing a lot of is buying it for their children.
Yeah.
Right? But my point is that you've got to have the wealth to buy it in the first place. And so the poor people are missing out, right? Because they just can't get the deposits. And they haven't got parents who say, listen, mate, I'll stump up, 300,000 for you. I got 2 relatives who have done it, right? So I've got a guy who's moved out and he's just sitting there vacant. I've got a friend who's got a holidayer, right, which is vacant Monday to Friday, and I've got relatives who have put their children in property via their equity they've got in their own property.
Yeah.
Right. So what I'm saying is, you times that by 100,000, 200,000, 300,000. Pretty soon you've got Airbnb with 300,000 properties that are short-term rentals.
Yeah.
Right? This is why we've got a really serious problem. And it comes from, a lot of it I think comes from the problems with income distribution, right? You've got rich people who are saying, I don't need to rent that property out.
Why would I? Yeah.
I just want to leave it there at my convenience. Because that's good for them, but it's not good for people who are saying, dude, can I rent your house? It's like, no, mate, I want to use it on the weekends.
Yeah, you got to go and rent a house for $750 a week in a shitbox.
Exactly. That's what I believe is going on. But there's not a lot of politicians want to talk about that.
Yeah.
Right?
All right, well, leading into Tuesday, we got CBA's average housing costs from June 19 through to June 24, which is the average loan repayment's going up astronomically.
Yep.
And like spending, as we discussed, is slowing most for the low-income earners and less so for the wealthy. So what we've just been talking about, low-income earners are using more savings than the wealthy, which is unsurprising. And although wages have risen slightly, everyone's feeling just more pain.
Yeah.
And there's a couple of interesting graphs there. One of them being, like I've just said, the average housing cost, but also savings by income, which is declining because of the housing costs going up.
Yeah. Well, this is a sort of a weird problem where people who are paying a mortgage, some people are struggling, and renters are struggling. Now, because we haven't got enough property available, the landlord can just say, well, listen, mate, I've got to pay an extra $80 a week, so your rent's going up an extra $50. Right? The tenant can't go, oh, bugger you, Jacob, I'm moving out down the street. Why? Because there's nowhere to go.
Nowhere to go, yeah.
Right? So you've got to suck it up. Now, what does that do? You now say, all right, well, I can't buy, I'm not going out to have meals anymore because I've got to pay the extra $50 a week in rent.
Yeah.
Right? Me, as the landlord, says, well, I'm feeling a bit of the pinch now too because my housing payments have gone up, so I'm not going to go out and buy food either.
So what's happened now recently is landlords can only put price up once a year.
Yes.
And everyone's going, oh, that's going to screw the landlords up. But in my mind, they're just going to wait a year and put it up twice the amount.
Exactly.
And go, if you don't want to pay it, we'll find someone that does.
Absolutely. That's only a solution when there's plenty of supply.
Exactly.
But if there's no supply, then the poor old tenant's got no real option.
If it was me, I go, well, I was going to put it up $20, but I'll put it up $60 instead, just in case, because I can only put it up once.
Yep. I need it because I think interest rates might go up.
Yeah.
I'm saving money because, geez, I'm a little bit worried about what's going on in the economy. So what you've got is everybody either down paying debt or saving.
Yeah.
And that's why I keep saying somebody's got to start spending some dosh, right? And if we've all got a lot of debt, which we have because of property, there's only one entity that can spend, and that's government, right? Business can spend, but business quite rightly are saying, well, Jacob's not buying any coffee, so why would I buy a new coffee machine?
Yeah. There's no growth.
I'll just hang on to my $5,000 in cash, and in fact, you know what I'll do? I think I'll buy a property.
Yeah, like the rest of them.
Exactly. Right?
Yeah. All right. Well, let's go to Wednesday. This is the stuff that interests me: mean reversion, and just comparing mean reversion to different bubbles. So you got the railway mania from 1842 to 1848, tech bubble from 92 to 2003, 2008 to 2016, shale revolution.
Yep.
Whatever that is.
Yep.
I'm not sure.
Oil shale.
Oh, oil.
Energy.
Okay. And then AI from 2020 and ongoing. And the thing that stands out for me, obviously, is that the railway, tech bubble and oil have gone up exponentially, 135, 400% and 200%.
Yep.
And then decreased and came back down to meet
Exactly.
their maker.
Yeah.
AI, we're not quite there yet. But
we'll get there.
That's what we're trying to say, right?
Yeah,
It's not just going to, like you said last week, the trees don't grow to the sky, into space. They come down.
Well, and again, this, we get a lot of people commenting on Instagram going, oh, yeah, blah, 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 blah. And it's like, guys, I'm not talking about this cycle. I am talking about the way that markets work, right? So it's equivalent of saying, here are the 10 commandments, and one of the 10 commandments is you shouldn't steal your neighbour's ox. Well, that's bullshit, mate. I stole 3 of them and I'm doing all right.
Yeah.
What I'm saying is, I know that you've done all right this time, but you are in a cycle and this is where you are.
There'll be a time where your hands get chopped off.
Exactly. Right. And what I'm trying to say to people is, if you look at market history, which is your best guide, we know that market cycles repeat. Right. And even on pure logic, you can't say things will go up forever. Now, they may well do, but as an investor, I'm looking at the return over my time frame.
That's right, yeah.
So I saw one during the week, and it's the same old stuff, like, if you've started investing in 1925, $1 would be worth, 500,000 in Nvidia or whatever it is. It's like, I know, but no one invests for 100 years. We're dead. Right? So give it to me in 20-year snapshots.
Yeah.
When you look at it in 20-year snapshots, you go, oh, hang on, you can make 1% per year or you can make 16% per year.
Depending on when you buy.
Exactly. Right? And that's why I'm saying you can't look at this cycle and go, you guys don't know what you're talking about. We know what we're talking about because we're talking about the expanse of history. Right? And that's why we're saying, look, it might run another 100%. I have no idea. All I'm saying to you is, here's what's happened before and it's ended badly. Now, you might be a smarty and get out at the top. Someone has to, right? Because someone has to hold that stock. But it doesn't mean that the cycle's not real just because you made money.
Yeah.
Right? I made lots of money in property in early 2000, right? Now, I'm not sitting here going, oh, this is bullshit. It's really easy. You just buy property and away it goes up, because I know the cycles, right? And I know that not everybody gets to make money, because some people buy property at 500,000, some buy it at $1 million, some buy it at 1.5. That outcome is different for everybody depending on what they pay and what the return is.
Yeah. There's an interesting book which I just finished reading called Yes, You Can. You Can Time the Market.
Yeah,
Ben Stein.
Great little book.
Which took me a bit to get into, but it makes a lot of sense.
Absolutely.
As well as to the snapshots you're talking about, which is just, if you learn how to value, you've got a process to help you understand where things are in a cycle.
Yep.
You can find something, no matter what the cycle is, that's relatively cheap.
Yeah.
And you can have an asset allocation strategy to feed money into it.
Yeah. Well, emerging markets are cheap at the moment.
Yeah.
Right? Now, and I think we discussed this a couple of weeks ago, where I said the problem is with the CAPE ratio is it's a 10-year indicator. Okay? Now, the issue is, if I said to you, Jacob, go and buy Brazil, right? It's really cheap, right? Or go and buy the UK, it's on a CAPE ratio of about 14, right? You don't know if I'm right until 2034, where you come back and go, bloody hell, Steve, that was a great call on Brazil and the UK, mate. I made 15% a year, right? Because at the moment you're looking at it going, oh, the UK looks terrible.
It's crap,
Brazil looks awful. But that's why we use market history and correlations to say, yeah, but every time you've invested in low CAPE countries, 90 out of 100 times you've done well. So 9 out of 10 times you've done well. How do you think you'll go? There's a 10% chance that you won't make any money. And then what we do is talk about asset allocation. All right, well, if that's the case, don't put all your money in it. Right? If you've got 10,000, start with 5,000 in Brazil. Yep. And if it goes down, put a bit more in. Yep. Right? And if it goes down, put a bit more in. And the reason why is because if you use ETFs, they won't generally, as a country, go bankrupt.
Yeah.
Right?
And it's still cheap, right? If it keeps going down, it's still cheap. Yep. And what we say time and time again is if the big dogs fall, so if the S&P falls in the US, for example, then emerging markets will probably fall even more and become even cheaper.
Yes.
But because mean reversion exists and cycles exist, the run-up will be much better.
The institutional investors, and I'll just take a step back, the classic example recently was Russia, right, where the Russian ETF went bad because of the war, right? Now, other than that, generally the returns on the Russian portfolio were fantastic, right? Because it was cheap. And that's why I say, well, you don't put all your money in one thing, right? Because there's the chance, even if it's, 1 in 100 that it goes bankrupt, well, you don't want to go bankrupt. Yeah. Right? So don't put all of it in. And so that's why what you see with institutional money is it searches for yield, right? And so at the end of every year, they have to rebalance their portfolio. And if I'm an emerging markets portfolio manager and I've got $1 billion, I've got to spread it across the emerging markets, right? Now, generally they'll do a bit of the momentum thing. Hey, Indonesia's going gangbusters. Oh, I better have some money in Indonesia. And they'll look at, Brazil, right? Oh, commodities doing terrible. All right, I'm not going to put much in Brazil. But at some point they look at Brazil and go, hang on a second, it's doing a 6 to 7% dividend. That's really good. I should put more money in Brazil. Now there's 1,000 fund managers going, you know what, Jacob's putting a bit more in Brazil. I might have a look at that myself, right? And suddenly we're now starting to put money in Brazil.
We all love Brazil again.
Lo and behold, 12 months later, we've got a story. Oh, Brazil's doing really well. Why? Because the stock market's booming. Yeah. Right? Even though, and we talked about this last week, the price of NVIDIA is insane on fundamentals, but people are listening to the story. Why? Because the bloody stock price is going up.
Yeah. And it's retail investors that are propping it up now.
Yeah.
It's going to be a mess.
Yep. Well, they're always the last ones in.
Yeah.
Right? I hate to say it, but it's the dumb people because they don't have the knowledge to go, this is crazy.
Yeah, well, we've been there, right? I've been a dumb person, and arguably I'm still a dumb person, where I've rinsed 20 or 30 grand up a penny stock.
Yeah.
10 years ago.
But every investor, and I was talking to a mate last night about this, every investor generally loses money at the start. Right, and the reason why is simple: you don't know what you're doing, right? You don't
or you make a lot of money, and then
bloody Jacob's bought Bitcoin. He's making shitloads. I'm going to buy Bitcoin. The problem is Jacob bought it at $5,000. And I'm buying it at 65. Right, and I don't know what I'm doing, but Jacob's getting rich, and I hate Jacob and getting rich, and everybody else is doing it, and this looks really easy, right? That's what happens, right? Or you buy junior penny stocks. Why? Wow, man, if they double, I double my money.
Yeah.
And I've got 10 grand. I'm going to put 10 grand in, Billy Smith's mining, right?
I had a friend reach out last week saying, mate, you're obviously doing well with crypto. Can you give us a hand? I'm thinking about putting 20 grand in. And I said, what's your plan? What's the process? He's like, what do you mean? He said, what do you mean? What's the plan?
I just got to lose 20 grand, bro.
I was like, he said, well, can you help me? I was like, well, no. What's your plan?
Yeah.
Well, not what you don't want to use. You don't want to trade like and invest like me.
Yes.
You need to make an investment plan for you. And he's like, it's all too hard. I won't bother then.
Yeah.
And like that's the classic example of people just wanting it for nothing.
Well, I don't think they want it for nothing. I think, and I was thinking about this yesterday. Really, if you want to be an investor, you have to be a person who's curious and you want knowledge, right? You just saying I want to be rich tells me absolutely nothing. Everybody wants to be rich. How many people want to put in the work of studying economics or studying the stock market or sitting by yourself and just thinking, I wonder how that works. That market cycle thing is interesting. I might have a look at that a little bit more, right? Because ultimately, like your mate and you can't say to people, well, you've got two choices. All right, mate, give me the 20 grand and I'll invest it for you. But hey, buddy, it could end up being 10 or it could end up being 100.
Yeah.
Right? Or, no, which is what we do is say, let me teach you about the stock market. Then you might go, Steve, that's full of crap. I'm buying Bitcoin. It's like, okay.
But at least you know now.
Well, that's why I developed the 8 principles, because mean reversion, personality, asset allocation, rebalancing, diversification, all of those apply to any investment.
Yep.
You want to invest in Bitcoin? Yep. Okay, well, think about asset allocation, rebalancing. I want to buy a property. Okay, well, think about mean reversion and market cycles.
Yep.
Right? I want to invest in art. Okay, well, think about your personality and buy low, sell high. Right? That's the point. And the point is we don't generally talk too much about what's going on in the current market in that perspective, right? All I'm doing with people is saying, here's the current price, look at it with those 8 principles. Do you think it's a good investment at the moment from what I've told you about market cycles, asset allocation, rebalancing?
Yep.
Right? That's what we teach people. We don't say, you've made lots in property and all right, well, you're doing fine, double up, buy 6 of them.
Yeah, no. It's the giving someone a framework.
Yes.
To go, okay, this is how I'm going to invest for the next 50 years.
Yeah.
Not just how I'm going to get rich in the next 5 months.
When you see, like the last newsletter we did, is that July? Yeah, July. Yeah. The July newsletter focused on market tops and showing people what shows market tops, right? Irrational exuberance, huge PE ratios, new era, right? Now, NVIDIA, new era, okay? AI, artificial intelligence, right? High PE ratio of 80, right? Headlines all over the place. It's all in the news, right? All of those things add up and you go, geez, I don't know whether buying this NVIDIA is a good idea. If you want to buy it and hold it for, 5 years, you're buying it on a PE of 80. Now, if you want to buy it and look at it in 3 months' time, by all means, but I have no idea what's going to happen. But I can tell you what's going to happen over a decade, right? Why? Because I looked at market history and go, every 10 years, the top 10 companies change considerably, right? And that's what you got to look at.
Speaking of worst day for stocks since October 22 and companies changing, we've got Tesla down 12%, NVIDIA down 7%, Meta 5.7% and Google 5.1%. It was a shocking day.
Yeah, but it's only just one day.
It's volatile. The volatility though. Speaking of market tops, when's the most volatility around market tops? Yeah, or declines.
The thing that makes you nervous here is that where they're going to stop? Now I know from market history that that's not where it stops, right? Because what happens is suddenly the narrative changes because the price is falling.
Yeah.
Right, and that's when people start to go, you know what, I've made a lot in NVIDIA. I think I'll just sell it.
It's the group think. It's the herd mentality of,
absolutely.
Old mate's selling NVIDIA, I better sell some too.
Yep. Now, the flip side of that is Tesla went down 12% that day, but somebody bought those shares thinking Tesla's going to go back up.
Yeah.
Right?
Fundamentalists.
That's what I mean. You've got to look at that and say, I look at that and say, look, the CAPE ratio is at 36. NVIDIA is on a PE of 80. Look, it could well go to 100. The CAPE ratio could go to 40 and 44. I have no idea, but it's really tricky buying it at the moment. All I'm doing is looking at a history and going, every other time you've bought this, you've lost money over 10 years. I'm investing for 10 years. Okay, well, you're probably going to lose money. Okay, I think I'll wait.
Yeah.
That's all it is. Right, that's all it is. But the painful part is going, oh, bloody Jacob, he's always talking about making money in NVIDIA. Oh, maybe I'll just buy some NVIDIA, right? Like you said, and it goes down 20%. You go, oh, this is bullshit, The stock market's a casino. It's like, no, mate, Jacob bought it at $3. You're buying it at 300, right?
Yeah. Have a plan, folks. The Friday Magnificent Seven market cap obviously is higher. We've talked about it a bunch already.
Yep.
But it's higher than any non-US stock market in the world. In the world, folks.
Crazy.
The group's now worth 15.7 trillion as we're reading this, and which is almost double China's whole stock market, which is 8.7 trillion. And it's worth nearly as much as the German, Canadian, and other markets.
All thrown in.
All thrown into one bag.
Yep.
So if that doesn't tell you that we're overvalued, then I'm not sure what does. In the bonus section, we've got places to fish. Remember, we can start with a cheap country, emerging markets, or a cheap sector like emerging markets, and then look at a cheap sector within that. So it might be energy, for example.
Yep.
So
Hunt in emerging markets, right? Go where it's a cheap country. Let me use an example. Brazil, right? Brazil's got a CAPE of 10. Okay, that's really cheap. All right. Now, there must be a cheap sector in Brazil because the whole country's cheap. Okay, now you go and look at the energy sector, right? You go, oh, it's on a PE of 7 or something, right? Oh, okay, well, it's cheap. Then I'll go and look at a company. Then you start to say, okay, will the company go broke? Will it survive? What's it provide? Oh, it provides oil or something, blah, blah. Okay, well, it's on a really low PE. It's got a good dividend. Okay, well, that's worth investing in.
It's as simple as that.
Yep.
That's how you get rich.
Over the long term.
Over the long term. Short story. Steve, do you want to finish up on this one?
Yeah, just again, what I'm trying to do is say to people, always think about things that are cheap and things that are expensive, right? Energy's really cheap at the moment. You know, go and look there. You're probably going to do a lot better than trying to buy Nvidia at, for the next 10 years.
Yeah.
And in CAPE terms, look more at Brazil and the UK and those other cheap ones rather than look at the US at 35. Now, there could be a cheap company in the US, and there are, but you've got to be a little bit more targeted rather than just go, it's cool, I'll put money in and I'll do well.
Yeah.
Right?
The difficult thing is people looking at it and going, well, the US has done really well for the last 20 years, so why won't it keep doing well?
Yeah.
And that's
what beginning investors do.
Yep.
Beginners look at the recent past and go, oh, look, Nvidia's killing it, I should be in Nvidia. Experienced investors look at it and say, it's had a really good run. Is there anything left? Well, there could be, but I'm not going to take the risk.
Yeah.
Right? And that's the question of, I'm not going to lose money. How do I not lose money? Not how much am I going to make? It's how much am I going to lose? Right? Even if there's a 10 to 20% chance of losing, how do I avoid losing? Because what we know is over the long term, it's not making money. It's not losing money that really adds value.
That's it. All right. Well, on that note, we'll wrap it up there, Steve.
Yep.
Anything else to add?
No, that's it.
All right. Thanks, everyone, again. We'll see you next week.
Cheers, folks.
Stay up to date on our socials. Just search for Total Money Management on Instagram and TikTok. For your free investor personality assessment, go to totalmoneymanagement.com.au. And as always, remember, we don't provide financial advice.